the presentations that have been made before we then go to the open the floor for input and questions, comments from the participants. I will start with Sekai here, Honor Ladies, and she happens to be next to me. Sekai, you got the floor.
Thank you very much, Chairman, and thank you very much to the insightful presenters that were here earlier. So I'll share a few reflections from the presentations that have been made. One thing is quite clear, that the economic opportunities arising from the climate change transition are quite significant, and significant enough for us as a country and as an economy to actually develop strategies and ways of working together across the different sectors of the economy, so that we actually realize these opportunities that have been highlighted. Clearly, you can see that the financial services sector has a role to play. We can see that the business sector across the various sectors like agriculture, renewable energy, if you look at energy efficiency applications, there's also a lot that can be done. One of the key things that also came up for me was the issue of policy entrepreneurship from the private sector. And I'm taking this from the paper from CICADA, the white paper from CICADA, as a way of highlighting the economic possibilities, as well as also identifying some of the policy opportunities that may exist to unlock the returns that the economy can derive from this climate change transition. I also realized that from the CICADA paper, I think one of the issues probably not highlighted that I'm privy to is the tax structure in the carbon credit markets, which is 50%. I think it's 30% for the revenue generated by the projects is taxed, and 50% of that goes to the Ministry of to the Ministry of Environment, remains with the Ministry of Environment, and the other 30% goes to the Ministry of Finance or to Treasury. I think the question we have there is that this is an emerging sector of the economy, or of economic activity, which has potential to generate revenue for the fiscus, as it were. When we look at all the other economic activity sectors, we don't have taxes, some of them remaining with the sector ministries. All of it goes to Treasury, and then it's distributed as needed. So for instance, if you look at the mining sector, for example, in the mining sector, they pay their taxes. In industry, we pay our taxes, and none of that remains with the Ministry of Industry. So it also means that the issue of governance in terms of this particular emerging sector needs to be really looked at. We can see that there are various elements that are covered here. The financial services sector is covered. The natural or the environmental sector is also covered. Then in terms of the roles of the private sector, and I think borrowing from some of the presentation that was eventually not made, is the role of the private sector to actually adapt to climate change. I think this is an imperative that is coming out quite clearly, and the role of the private sector to participate in the financing of the climate change agenda. But looking at the presentations and what was presented here in terms of financing and currently the trends in the financing, you can also see that our credit worthiness as a country and maybe some of the issues that we are already challenged by in the macroeconomy may also be a factor that is affecting how well we can or how easily we can access some of this climate funding, climate financing that is there. which may then call for us to treat the macroeconomic issues with more urgency, or to find lasting solutions to the challenges that have bedeviled us for quite some time, so that we don't get way behind of this agenda and be deprived of opportunities to participate effectively. The other for me is that when we look at the climate change agenda, it's a really a new global economic system, and how, as a country, we are able to define or to identify what the business plan is for Zimbabwe in the emerging climate agenda, then we may not be able to reap the potential benefits they are, and we may be playing a defending game where we are trying to minimize the damages that may come from climate change, or try at best to comply with measures that will allow us to continue to participate in the global economy, but without a deliberate what are the economic returns that we intend to get from this climate change agenda, and how are we actually going to position business and to position the economy and its policies to get maximum benefit. Thank you.
Thank you very much for that intervention. Victor, it's you on the floor now. If we can have your perspective.
There you go. Thank you, ladies and gentlemen, for a very interesting set of presentations. Thank you very much. Thank you again for a very interesting set of presentations. I've learned a lot. Maybe starting from the presentation of Joyce Chuma, I think overall my impression of the 4 presentations is there are significant opportunities. This is a real new market, and it's up to us as development partners, as up to government, it's up to private sector to really get up to speed to understand where these opportunities lie, but also to understand where there is perhaps hype. And I feel that in the presentations, we saw a bit of a combination on each one. So I'm quite positive on some of these. I'm more of a skeptic on others. And so perhaps on corporate green bonds, it's one area where we see the literature coming out to say that corporate green bonds tend to occur in places where there are strong corporate bonds in general. So I was not surprised that you used case studies of South Africa, Morocco, and Kenya. These have relatively deep financial markets, and green bonds tend to occur there. So a recent study from NYU that I saw found that green bonds look very similar to other bonds in terms of costs, yields, and outcomes. So perhaps there it might be more business as usual with a bit of branding attached to it. And so I think that that's not necessarily a bad thing, but I think it's something for us to be mindful of. On the presentation on graphite, I thought it was extremely interesting. There's clearly a lot of potential in the growing market for graphite, and interesting that it's a second application for batteries for Zimbabwe. My question here for the presenter is that where I thought the presentation was perhaps had some challenges, is that it didn't really talk about the market failures that are preventing value addition in graphite going forward. So you mentioned that there's a need for a good investment climate, but that is the case for most other of our investments. So what does value addition in graphite actually look like? Are there significant economies of scale, and that's why you bring them all to one specific spot? Is there significant energy intensity, which would be a burden for Zimbabwe's quite precocious energy sector? And so, or is this just a matter of information? So do we just not know about do investors not know about the fact that Zimbabwe has access to really good graphite, in which case there's a role for ZEDA to play in getting the message out. So what really is the binding constraint here? And so how can we move forward? But again, it seems like the potential is there, so it'd be great to learn a bit more. Then the great presentations from African Wildlife Foundation and from Cicada, both on carbon markets. And I think that they set out both the opportunities as well as the challenges for carbon markets. We heard that there have been historically challenges with compliance, and so there was a mention that globally, some of the carbon projects have been suspended because of compliance challenges, and this is a real risk. And so what are the governance circumstances that allow us to have these types of carbon projects in a sustainable manner that allow for revenue for years to come? Then also, I thought the proposition, both were very clear. I think African Wildlife Foundation summarized all the various projects that could be explored in terms of energy, in terms of nature preservation, while Cicada was talking about the existing situations. And so there's a lot of potential there. It would also be good to understand what this means for carbon pricing. So we know that there has been a significant decline in the price of voluntary carbon, so carbon credits. Is that something that is going to go up, in which case now would be a very bad time for the government of Zimbabwe to give away its carbon credits for a long period of time? Or is that already built into the price? So I think the government should really understand what this means in the medium term. Where is this market going, and how...
Victor? Nigel, if we can have your take on the issues on the table.
Okay, thank you, Chairman. I think very interesting papers, and commendations to the ministry actually for bringing this important topic into focus, because we tend to be confined to the here and now challenges. This theme is actually very futuristic and allows us to actually delve with medium to long-term issues. So commendations for having us. Now, given the different papers that we have, I want to give an overall summary. I love the fact that Sekai is talking about a new global financial architecture. In banking or finance, we say that this is a sexy area. And I use that word deliberately and intentionally. Why? You want to go where the money is. The money is in green energy. Globally, I think the figures were shown. So it is an appealing area. And we've got to see how we ourselves, Chairman, can address ourselves or position ourselves so as to attract the funding appropriately. So if we talk, carbon credits, we talk green bonds, it means there are certain requirements that we have of government, and specifically Ministry of Finance. We are talking about, the engagement and re-engagement process. How do we tap into the international financial markets? We need a yield curve. A yield curve speaks to a medium to long-term period. We've got to go beyond 2030, because some of these projects are, for example, energy projects. There are dam projects, water. And that means beyond the 6 or now 5-year tenure in terms of finance. And so the imperatives, they are very clear in my mind. You want a stable exchange rate. And again here, when I talk about the exchange rate, I'm not as concerned for a minute, because we are actually the only hard currency exchange. So can we use the Victoria Falls Stock Exchange, for example, and exempt it from the limitations of this 5-year yield curve? Because if you're talking bonds, you're really talking longer-term bonds, aren't we? And there were papers that were presented in that direction. And so we talk about a stable exchange rate, we talk about interest rates, we talk about inflation. So government, we would be saying, give us no slippage on the currency, give us the stability that would ordinarily attract medium to long-term funding. And then, just again, cutting across all the papers, it looks like we've got a statistical issue here. Because when we look at, for example, the comparative analysis that were done, I'm sure we qualify for some green finance or some credits, because we've done Fumvudza, haven't we? We've done solar projects. What the PERMSEC at the Ministry of Energy spoke about in terms of the various projects, I know certainly there are no less than 25 solar projects that have been approved. And if we are already producing and feeding back into the grid, then I suspect there's a measurement problem. And that really then speaks to, are we collecting the appropriate information? And then are we dressing our projects appropriately so that we become appealing for this type of finance? Again, when I look at property investments, the construction industry is booming. But most new projects that are being done, I mean, West Properties is a case in point. And I know, because I sit on the advisory side for them, if they've got a green element in terms of their project, and then also the credits that go with them in terms of carbon credits. Then specifically, if I may, Chairman, when we go to the first paper from Madame Makombe, we've actually moved backwards, and Sekai is here to confirm. We've moved backwards somewhat in terms of a deindustrialization process. Now, should we not be credited for that somehow? We have less heavy industrialization. We are doing light manufacturing. Hello? We're doing light manufacturing. Forget about your heavy industry, your moorway, your furnaces. So where do we end up? If we've kind of deindustrialized, then guess what? In my mind and in my world, Chairman, we're moving up. Not that we want to be there, because we want, of course, to increase the contribution of manufacturing to GDP. But the reality is our circumstances have found us with less carbon emissions as a consequence of that. So the monitoring and reporting, I still have an issue with. And then I would say, Mai Makombe, again, when you've got your Manize plant, we contrast that to Zisco Steel. And we see whether we are actually better off, whether we have got a cleaner plant, and we are moving in that direction of beneficiating all that iron and steel. And so, again, the monitoring and evaluation pitches up there. Now, we go on to the next paper. And the next paper spoke about, the attractiveness of international capital markets. We need to build a yield curve. Ministry of Finance issues a bond program. The bond program, I think, Prof has just, I think he's still in the room. I would say that if we've got at least a minimum of 100 million issuance of a short-term government stock, a medium government stock, and a long-term government stock issued to generate our own yield curve. What does that mean? Yes, you can pay a certain coupon for it, but then you allow it to be discounted so that the market finds its own level. And then we plot a yield curve so that we actually measure what the yield curve looks like. And whether it's an inverse one or it stops at the moment, it stops at 2030. But that's not going to attract the funding that Sikada is looking for. Or for us to run a comparative analysis with your Kenya, your South Africa, your Morocco. We actually had a robust capital market, which unfortunately we lost along the way. But I believe because we've got the Victoria Falls Stock Exchange, let's build that yield curve based on that exchange. Then we move on to, so I think I covered Joyce and great paper when we do a comparative analysis. Collins, in terms of your paper, I want to specifically tackle this Pfumvudza issue, which was covered in your paper because we were rated 0. And, you know, I'm being the hard-nosed economist, and I'm kind of rejecting that. Let's go back to Pfumvudza. This concept was developed originally, and let's understand this one. It's really for a family in a very confined area. And we're saying one family gets a measure. It's a standalone concept for a family household, food security for a nation, which is subject to these weather vicissitudes. Isn't that so? So we don't want to confuse it with any other farming mechanism. The moment you scale up your Pfumvudza beyond one family, it's no longer Pfumvudza. Let's get that right. And I believe the late Perence Shiri is credited for bringing it into play. But let's look at it strictly. It's 16 meters by 39 meters, which makes it a 16th of a hectare. The cost of that program, Prof, is $55. There's a specific pack that speaks to the lime, the fertilizer, and the seed. And if we're talking 3.5 million families, then we should confine our funding to strictly that and not try and, in a year, for example, I would love to see a regression analysis that is run to say in a drought year where the forecasts are clear, are we still spending the same amount of money on fertilizer and seeds? Because we shouldn't. We should actually come down in terms of, we say less is more. And that means every family member is then fed. Are we correct? And they're fed with the various crops that we are talking about. And then we also now with Zimstat are measuring, Ministry of Agriculture, we are measuring. And I'm pretty sure with our agricultural land mass, we don't come to zero. So I reject that outright. What Pfumvudza also means is it's done on time. Get the seed, get the fertilizer, get the lime, get everything there on time. It's done to standard, without wastage. And then it's done with joy. And then again, linked to agriculture, to add to my little hypothesis, Collins, is we've got the tobacco levy. The tobacco levy allows for replanting. Now that replanting is your reforestation, is it not? Sikada. So now, are we measuring that? Maybe we just don't have the stats and the measurement that go with that. So I loved, you know, when we move away then from the academic papers to what I would call the pracademic papers, where we're moving from the research and we're saying, for example, we want to drive, you know, afforestation, we want to drive engineer poor, what you were saying of a huge opportunity that we can exploit. What's missing from your efforts and your papers, I believe, is the business case. I want to see the business case because I think like an investment banker. I want to see the return on investment. And all that applies to everything that we then do. How can we package our energy projects? We've done our feasibility study. What do those returns look like? Let me stop here, Chairman, and thank you.
Thank you, Nigel, for that incisive intervention. We can move on to Godwin.
Thank you very much,
Your
Chair.
input, please. Thank you.
And just to observe our protocol, and also to appreciate the work that has been put forward by the various presenters on this interesting and novel topic coming in as a result of climate change. I think what is coming out clearly is that there's a funding gap in as far as climate change, adaptation, resilience projects are concerned. And because of that gap, government cannot do it alone. Certainly, there is need for the private sector to come into play. But also, as the private sector comes into play, there are also some demands from the private sector. Because the expectations from the private sector is that they should therefore produce the innovative goods and services that should address the various climate change challenges that we face as a country. And therefore, what they demand from government is an enabling environment through the incentives. I think this has been very loud and clear in the various papers presented, the regulations, and also an enabling macroeconomic environment. I will not speak more about this. I think yesterday we heard about if you are to make an investment, for example, the mini solar grids, you invest using US dollars, and there's a feed-in tariff there. And what do you get from, after having invested in US dollars? As an investor, would you want to get your returns in the Zim dollar? That's another issue, again, that needs to be looked at. Then also talking of investment, as I said, this is really a business matter. Talking of incentives, rather, this is really a business matter. From some of the literature, these climate smart incentives, they take about 5 to 10 years for you to realize some returns out of it. But also looking at the incentives from the perspectives of the fiscals. We don't want government to lose money, but there are also some simple incentives that can be put forward, like just a simple recognition for those who are already making some projects in the area, just recognizing someone, you always say, recognize me and you have given me wings. So just a simple recognition. It comes at no fiscal cost, but just to recognize the small steps, the small gains that the private sector would have made. Also, what is evident from the presentations that have been made is that surely as a country, there is potential for the carbon markets, the green bonds, the carbon credits, and there's really need for us as a country to have a further analysis. I think what it calls for is further research, further dialogue around the issues, because what I also observed is a knowledge gap. Because in one of the papers, it shows that private sector, this has not been presented, but it was supposed to have been presented. 83% of manufacturers, they have insufficient knowledge about carbon credits. And therefore what it means is, I think we need to streamline the climate change issues in our day-to-day businesses, including even the business member organizations. I think as they have their conferences, they should also probably have some topics on climate change, trying to understand, trying to inform their various members. Then there was also the issue around the ESG issues that has come out, particularly with regards to deforestation and tobacco growing. Has come out as one of the key projects that is causing deforestation. And I should say, this is actually something which is also being discussed under the World Health Organization Framework Convention on Tobacco Control, under Articles 17 and 18, where they speak about alternative crops to tobacco growing, as well as being cognizant of the environment whenever we are undertaking such projects. Then lastly, Chair, let me also speak about maybe the way that we package, of course, from the UNDP Africa Investment Research Report of 2024, it shows that there were about 207 projects that they have looked at. And of those, 130 of those projects, they have a potential for a climate smart action and also for contributing towards the achieving of the nationally determined contributions under the United Nations Framework Convention on Tobacco Control. But I think what is missing from our end as Zimbabwe could be the issue on how we package those investment opportunities, especially in the areas of climate, that are climate smart, like renewable energy, like your irrigation. Because as we speak, we are living in a global village. We are also targeting the FDIs, the same incentives that we are offering. They are being offered elsewhere, and they are being offered with a plus on what we are offering as a country. And therefore, I think as we package the various investment opportunities that we have, we need to package them in a manner that makes them very competitive so that we attract more investments into the climate smart initiatives by the private sector. Thank you very much.
Thank you very much, Godwin. At this point, I would want to open this session to the floor. I am aware that there are interventions, issues that were raised by the panelists to which the presenters may need to react, but I will give the presenters an opportunity at the end. For now, we can go to questions from the audience. Thank you.
All right, so Andy's moving around with the mic, and there's a hand up there. Madam, please introduce yourself and tell us who you're posing your question to.
Thank you very much. Anyone is free from the panel to respond to the questions as they deem appropriate. But what I wanted to highlight, first of all, was just to say, I think the voice from Ministry of Environment was not loud enough or missing from this conversation, and I think they've got a critical role to play in the conversation that we're having now. Because I think they could have also clarified. I am sure that they are working on several things. They are also probably working on policies. They are the ones responsible for the climate bill, and there are issues that we are raising here that I think they could have also spoken into and would have come out even better. But we are grateful for all the presentations that have come through. And then I just had a small suggestion based on the observations I've made on the presentations that have been made. Maybe going forward, when presentations are being done, if there can be a cutoff to when presenters submit their papers, and then all the panelists and the presenters get an opportunity, maybe 2 weeks, to sit with those papers. Because I observed that if I take, for an example, the presentation that was made predicting the future in terms of the maps, and then the strategy that we have for hydro power, the two, we're not speaking together, and I'm not sure how that can be aligned, because we have the policymakers and then we've got the researchers, the academic papers. They have findings, and I'm thinking our policies should be driven by findings from research. So I've just highlighted one paper. I thought the presentation on hydro and the presentation done on mapping, those two might need to find each other even post this. And then also on carbon credit trading, just to say, I'm not sure as a country if we are fully understanding what it entails, whether our policies are aligned to that, whether we have sustainable positions coming through regarding that, and then to have a structure which is mutually beneficial for both the investors as well as the citizens or the country, because we are speaking about incentives, but the position is that it has to be balanced. It has to be mutually beneficial, the investors as well as the citizens and the country. So just to say, we need to look into that. There was caution on commissions yesterday. I would also like to caution on funds. I think the funds are quite a lot. in this the bill which is coming on climate change speaks of a fund. We do have the carbon credits trading fund. We are also speaking of a contingency fund in this one. So just to caution, because at the end of the day, that speaks to more taxes, and I think we're already having issues with that. Thank you.
All right. And also a reminder to introduce yourself, please. Thank you.
Thank you.
Teresa from ZEDA, sorry.
Thank you. Enimo Tarwinga from Securities and Exchange Commission. I wanted to comment on two papers. The first one from Dr. Chuma. I just wanted to add to her recommendations. She spoke about green finance. One of the things that we need to also work on as a country is to develop our sovereign debt market. Because attempting to do green bonds, whilst we have not developed the basics, which include the sovereign debt market, is similar to trying to get a child to run before they can crawl. If you look at the countries that were mentioned that are doing well in terms of green finance, South Africa, for example, has got a very deep sovereign debt market, more than 1 trillion rand worth, contributing more than 90% to that capital markets liquidity in that country. Same thing with Kenya. They've got more than 140 government bonds listed. So just wanted to add to the recommendation that if you want green finance to work, we also need to develop our sovereign debt market. Dr. Chanakira added that we also need a yield curve, and that can only be derived if we have got an active sovereign debt market. Then on the paper on carbon credits, also wanted to add in the recommendations there. If you look at what has been happening, I think we've been focusing on the creation of the credit itself and less on the trading of it. So one of the things that we also need to have is to securitize the credit so that it can be traded on the capital markets. The countries that are doing well in terms of trading these carbons are trading it on the secondary capital markets. And so we need that extra aspect where we actually securitize the credit and make it tradable on our securities exchanges. Again, if you look at South Africa, they've already developed, as part of the JSE Avengers, a voluntary carbon credit market. I wanted to add those two recommendations. Thank you.
Thank you anymore. So we have 1, 2, 3 here in the row. Let's start with Renus, Jimmy.
Thank you. Quick questions. The first question, given that in this world of competitive international finance, Zimbabwe has struggled to attract investment capital, what assumptions are we making in believing that it will be more attractive in attracting green finance or climate finance? The second question, in agriculture, we normally complain that newly resettled farms are only 33% utilized. Utilization of newly resettled farmers involved logging miombos, convert them into large pieces of land for mechanized farming. To what extent are we taking the positive on agricultural development into a negative in terms of climate change targets, especially the commitments that we are making? Lastly, still on agriculture and our commitments, very ambitious. To what extent has Ministry of Agriculture endorsed the reversal of agricultural intensification to achieve the $8 billion targets, commitments already endorsed by Cabinet? Thank you.
Jimmy Silos from CZI. Yesterday we heard from the PS of the Ministry of Energy that the mandatory blending is actually a way of reducing carbon emissions because the ethanol is has less emissions, and that the sugarcane which is planted for the ethanol is a massive carbon sink. Is there scope for the nation to use that to get some carbon credits? Thanks.
Thank you. Cuthbert Mjoma from the Insurance and Pensions Commission, IPEC. The first comment I would want to make regards to baseline information in relation to climate financing. Listening to the presentations, it would sound as if there has not been any financing. But I believe we need to consider what we've been doing, especially from the financial service sector, through the normal cost of investments. I think a lot has been done. On Monday, it was on Sunday, I shared, I think, what is being done by the insurance and pensions industry from an investment perspective. Yes, we've not been that deliberate before, but I think going forward, we may even start with the baseline information. Then my next point of interventions relates to a submission done by Dr. Chuma, where she did mention misconceptions regarding the role of the Reserve Bank and ZSC. If she could shed light there, coming from the financial service sector, I believe there's a role for the regulators, because we are talking of financing, and much of the private sector financing would come through the financial service sector. We've embedded the issue of climate risk as part of the normal supervisory processes, as well as the financial stability focus. So what I think is key for us as we try to be deliberate in terms of climate financing is a policy coordination. From the nationally determined contributions, we need clarity in terms of the green financing, green policy, then green financing, especially as it relates to the financial service sector. Pursuant to that, the issue of taxonomy would be very key. By taxonomy, I mean the classification that defines the minimum set of assets, projects, sectors that classify to be categorized as green financing. Without that, there will be a risk of greenwashing. That is the risk of window dressing, what each sector is doing in terms of green financing. So I think we can leverage on work which is currently underway. For instance, the African Development Bank is currently assisting the financial service sector in coming up with a green financing taxonomy for Africa, and we can leverage on such work. I submit. Thank you.
Thank you very much. This will be the last question. We'll open that back to the panel, and then we'll be closing the session. Please, go ahead.
Thank you, Elisha Moyo. My two quick questions is to Collins. Thanks for your presentation. I think on the absence of carbon projects in the agricultural sector, maybe it will be very important to highlight some of the barriers which is causing this reduced or not having any projects in the agricultural sector, and what can be done to change that if we so desire to go in that direction. On the white paper by Sikada, I think I read on the earlier submission that maybe if we had the Ministry of Environment, the Climate Change Management Department, it could also help in aligning some of the issues. I like the 4 interventions which could be taken on board: the climate smart agriculture, the tree planting, the conservation. But I have a bit of reservations on the cook stove as an example. If we look at our revised nationally determined contributions, it has excluded that issue of cook stove as not having either feasibility or leading institutions to take that on board. And we have leapfrogged development in terms of cell phones, from telephone lines to cell phones, in electricity from cables to solar system. I personally don't fully believe that we are making great strides in development if we're moving towards cook stove as an example. We could do something better maybe and really move forward to a middle income country in the near future. And I don't think a cook stove maybe is the way to go. It's a personal sentiment, but maybe it needs to be looked, and it has been excluded from the Green Climate Fund Country Program and the NDC. Thank you so much.
Thank you. Right, Chair, we open it to you. This will be that's the final round of questions, so I hope we have about 10 minutes left, so 30 seconds or so to answer those questions. There was quite a lot.
Thank you very much. I will start with the presenters so that they address issues that arose from their presentations. then I'll conclude with the panelists, starting with my neighbor here.
Thank you, Chair. Thank you, Chair, for that. Maybe I'll start with the last question from Dr. Moyo, also answering to some of the sentiments around Fumvudza as well, and also what others say. So to answer you, Doc, is to say that if we are going to develop projects in agriculture, I think we will need a number of things to be right. In terms of the Fumvudza program, yes, it's a good approach, but we need to reconfigure it to ensure that we can tap into the market and what the market requires in terms of compliance and so forth. So there will be need to, at least, because right now the model is more of a climate smart agriculture, and you need to move more into eco-friendly inputs that you need to use. And you also need to ensure that in the chain of production, you need to have experts that will be able to run that project, to develop and run that project. Even the extension officers that we do have in this country would need to also fit that. And I would also want to say, in terms of there was an issue about trading the carbon of the credit and securitizing the credit, and I think I agree with you, and this needs to be where we need to move to ensure that we also tap into the market. And lastly, there is need to ensure that there is great and synergies between the Ministry of Finance and the Ministry of Environment, Climate and Wildlife, which is the one which is leading our international negotiations on the various aspects that relate to credit. Thank you.
Thank you very much. At this point, we transition to Jenna.
Thank you so much. I will try and be as brief and to the point as possible, Andy, but I think there's quite a few things that were focused at us. So I'll just carry on from Collins and just highlight that as Cicada, Nigel, we do in fact have a conservation agriculture program in place which falls within the remit of the projects in this fund. And we do think that the Fumvudza model should be carried on within the private sector. We have seen great yields coming out of it, but I do think Collins's point about realigning the government way of approaching Fumvudza could maybe be improved upon. But just for example, in Gairezi, we have seen yields of 4 to 6 tons per hectare under Fumvudza rain-fed in the drought. So it really does work, climate smart agriculture. Going to Mr. Moyo's point, carbon projects in the agricultural sector, I mean, I think they are there. For example, one of the long-term goals that we have with our Climate Smart Agriculture Outgrow program is to do a VM42 soil carbon project. This is not a simple thing to do, and it does cost quite a lot of money, and it needs to be done at scale. But this is a potential. Adding on to this, Jimmy, I think we would need to explore carbon credit projects out of ethanol. I do know that the hemp industry is looking at doing this, so we would need to look at the technical aspects of additionality and permanence relating to ethanol. And there are we have to see if there's a methodology around it, but I do know that the hemp industry are looking at carbon credits through growth of hemp. With regards to Elijah's comment on cook stoves, so I think something that maybe comes out a bit more in the paper that we need to highlight is that yes, the cook stoves are still using biomass, but they reduce biomass by 70%, and that's how you essentially generate carbon credits, by reducing deforestation. However, this is a 5-year project, and the aim of this is to be able to give Zimbabwe time to be able to get to a point where we can implement Tier 4 and Tier 5 cook stoves, which are your LPG, your biogas, and eventually going on to solar/electric. However, at the moment, the prohibiting factor here is that communities and also private sector cannot actually afford to implement these projects, which is further supported by the current policy framework that's in place. So our view is, instead of doing nothing, let's prevent deforestation for the next 5 years through a model that works well, that reduces emissions, has major social benefits, both on health as well as time saving for women and children, whilst we figure out time to deal with a longer term solution as technology grows and as well as there's more understanding around carbon markets. So I would love to have a further conversation with you about this. And then just to the gentleman from the ACC, as well as commenting on Nigel. So I think within the climate bill, there are two principles in there, one of which is on MRV and collecting data. So hopefully once the bill has been passed, the SOPs around MRV will come out and all that data is going to be collected. So your point is very strong within the context of measuring emissions within the country, but as well as a project status, which talk to governance. Governance is so important, Victor, for carbon pricing. So VCM at the moment is, the prices are very low under the voluntary carbon market due to issues around projects not being done well, compliance issues. However, we believe that we have very strong MRV systems in place we would be happy to share with anybody. But from a market perspective, the VCM market is depressed at the moment. However, the compliance market is growing and the prices are increasing. So part of our suggestion is to do a limited LOA on a trade of credits so that the country isn't giving away too much initially, so you can see how the carbon markets are developing over time. It doesn't mean sell all of them at once. It means let's do a trade, let's see what works, and let's go from there. The project or the structure also, what it does is takes the technology-based carbon credits, which are produced out of the cook stoves. That is then given away in terms of NDCs. However, the reforestation project, the NDCs are actually kept for the country, and that's a longer-term impact. I hope I've answered everyone's questions.
Thank you very much. Engineer Chawagarina.
Yes, thank you, Chair. I'm going to respond to two issues raised mainly from the panelists. One raised by Victor, great question, Victor. A contribution from Dr. Chanakira, great contribution, Dr. Chanakira. So with regards to the issue of hindrances or market hindrances that are there that are actually not promoting that popularity of graphite, you will notice, number one, as ZIM, we have been really pushing on the issue of trying to export our minerals as concentrate. We are not going for the finished product. And in the case of graphite, the big brother is our challenge. China is a big supplier of graphite, and we are competing against that, and you notice that they really dominate the market. So what you notice from the graph that I was presenting is that the graphite boom that is now coming 2023, 2024 and beyond is where the opportunity is. And I would like to hasten to say, let's not really target the export market. I think there's money in ZIM. There is 2 billion in informal sector in ZIM. Let's go for manufacturing finished products so that we can actually capture that. As for Nigel, yes, I think it's really an improvement that we need to do to really say what is the business case of what we're doing. I think we'll need to improve our submissions. I think we'll come for a second round with this and really take it next level, because I think it's just something that we then need to do. I think we also need to get partners in the business sector to actually help. Thank you.
Thank you very much. Dr. Joyce Schumer is available.
I'll go on to the last question. Yeah. Can I get my... Right, so after this, that's it. One, two.
Yeah, thank you. Yeah, this one I think I'm directing it to Sikad. Yeah, we have said under the NTC we should have commitment to reduce emissions. But what we have seen is countries like Germany, they are going back to coal. We've also seen quite a number of countries like Austria, Italy, Netherlands, and France. They are also somewhat going back to coal. And the issue of carbon credit, it is happening at a time when the net polluters are buying credit
for them to pollute more. I don't know if I'm right. The net polluters, those who are polluting more, they are buying. Right. So now, for us, we are well endowed with coal. And already we are being told that we should not pollute. And we are not net polluters. What should we do as Zimbabwe? Why I'm saying this is, you go to Zambia this year because of the El Nino. They are having a serious challenge on electricity because of the Zambezi. Yet they could have invested in their coal. And then for Zimbabwe, what is your recommendation? We've got lots. And for us, what should we do? Should we say, let's stop using coal to generate electricity because we want to reduce emissions under the NDCs? Yet we are not net polluters. The net polluters are buying credit to pollute more. Thank you.
Right, thank you, Honourable. So, final question, and if you could just be as brief as you can.
I would again also love to have a conversation hereafter, but I mean, this is a common argument that comes up. However, there's a lot of evidence that shows that companies or countries that are buying carbon credits have a faster decarbonization plan than those that don't. So, I mean, the reality of the situation is that we're not saying stop using stop using coal as Zimbabwe. We're saying we have low-hanging fruit in reducing emissions through reduction of deforestation through carbon credit projects such as a RED Plus or a Clean Cook Stove project, for example. I mean, there's quite a few others. So, yeah, I mean, I could go on for ages, but the reality is that why should we not do nothing just because other countries are doing bad things? I think that we have to deal with our local problems. Our local problems of deforestation are causing massive issues to ecosystem integrity, biodiversity, and that affects the livelihood of our people. But we can generate funds to deal with our own internal challenges by dealing with those environmental issues. And if there's a market to buy that, why should we not sell it to them? It's not to say that they shouldn't deal with their issues. They should. But again, evidence proves that countries and companies that are sort of committing to science-based target initiative have faster decarbonization plans than those that don't. And the reality is this is the way forward for decarbonization. Companies are going to get to a certain point where they cannot reduce their emissions anymore because, for example, like Zimbabwe, we have to use coal for electricity. That's going to be the same challenge with a lot of other countries, but they should still have to offset their carbon impact. And again, carbon has no boundaries and has no borders. So doing something good here does have an impact on doing something in another country.
Great, thank you. Please, a round of applause for them, for Tsikado as well. Chair, I leave you for your panelists, and then you can round up.
And I hope as the panelists respond through you, Chair, I'm not sure if all the questions that came from the floor have been answered. Oh, okay, all right. Dr.
There's one
Joyce,
or two questions, I think.
she needs a mic.
Oh. Right, shall we let her have one last question? Oh,
no, she's responding.
Oh, you're
Remember,
responding. Oh,
yes.
I didn't see you there, Doc. Sorry. Yeah. My apologies. I didn't see you there. Hold on.
All right, thank you. I'm going to respond to 3 questions. I'll try to be quick. The first one is with regards to, I'm responding to IPEC. The intention of speaking about where we need to go does not necessarily undermine what they've done. My point was, suppose we've put $2 where we need $100. My point is not demeaning the $2. My point is to raise awareness of where we need to go. For instance, if I can give an example, the latest figures show that our climate finance was at 488.5 million. So whatever has been down is being accounted for in that figure. But I'm sure you acknowledge from 488 million to get to 15 billion, it means something new just to be done. So in no way was I undermining what they have done as IPEC, but I was just saying for other players, we need to know how much we need to get to where we want to go. Then the other issue is, I do acknowledge that sovereign debt markets are a critical enabler for green bonds. But I think we've got to a point where we say when push comes to shove, we have to think beyond that. I can give an example. I didn't want to dwell into digital ledger technology as a way of evading the challenges we have with exchange rate, with interest rates, with inflation. Initially, when we talked of the Bitcoin, I think that was in 2010, it was worth 0.08, which is less than 1 cent, and people did say it wouldn't work. But right now, we've got so many stable coins, we've got so many cryptocurrencies that are also working within climate change. So in my perspective, I didn't want to bring that because it's a bit technical. But whilst, if it's not possible to have the sovereign debt market now, digital ledger technology is one way in which we can go. There is evidence to show that it works. So even if we are not able to follow the route from South Africa, Morocco, that's why I said sometimes you then need to tailor-make to your situation. So if Zimbabwe cannot have a sovereign debt market now, we can do digital ledger technology, unless there's evidence to say that it doesn't work. But from what I've seen, people are already doing it and it's working. So that's one avenue to go away from the situation if we can't have that sovereign debt market. Then the other issue was with regards to what I said about RBZ and the Zimbabwe Stock Exchange. My point was to say the current regulations we have and the support system we have from these institutions is a basis for us to talk about the development of a green bond market. So for instance, if I talk about digital ledger technology, then also means we need to engage RBZ to have specific legislation on or regulation on green bond markets. So in the same manner, I have not demeaned the standards or the guidelines that were done by the Zimbabwe Stock Exchange. But what I'm saying is, because we've got a unique situation, we've got macroeconomic instability, which may require us to think beyond what we are doing now. For instance, if I talk of digital ledger technology, it means we need regulation along those lines. So that's when we need then to engage RBZ beyond the traditional instruments that they've given us. I think those are the major issues that I wanted to highlight here. Thank you so much.
Thank you. If I may, Teresa from ZEDA, the issue about research papers that possibly not agree with each other, don't forget that's exactly what research is, isn't it? It's about people putting together paper from their data, coming up with conclusions, then of course we discuss them and see which is the right data set, which one is going wrong, what's wrong with it. So I think research should be allowed to have a debate with itself rather than everybody agreeing on the same papers. I'm not a researcher, but I'm sure you researchers would agree with me, yes? You can't all agree with each other. Right, Chair, over to you, sir.
Well, thank you very much. Some of the comments that were raised were actually suggestions on how we can improve the arrangements going forward. The lead time for sharing documents, facilitate prior review, improving the framework and so on. I don't know if there are other specific issues.
Was Jimmy's question on
Jimmy's
the ethanol?
was answered, yeah, Jimmy's was answered. No, I think that was it. I think most of the specific questions were answered. Not yours, Reneth? Okay, let's.
I think it was on what assumptions are we making that Zimbabwe can succeed in.
Okay, hold on. Okay, Linda, let him quickly.
Listen, yesterday I also asked a question that was not answered, and I was very polite about the National Irrigation Fund, which was there, and why can't we do it now when we need to develop our irrigation? It was not answered, and very politely I put it aside. The questions I have asked are the contradictions under the whole of government approach, which is our mantra, that the climate environment ministry is going on a tangent to the productive ministries of agriculture and sometimes industry. And I'm asking this question specifically for the economic development component of the Ministry of Finance and Economic Development to address this lack of coherence between line ministries. Each one goes and does and makes commitments that affect the deliverables from another ministry. Our commitments, as they are summarized on the environmental side, are completely at a tangent with the commitments that are being made in the productive sector, such as agriculture. I've used the example. We have done land reform program as a progressive, equitable distribution of land, where a piece of land which had 30% land being utilized and 70% was Myombo woodlands, was reallocated to Zimbabwean black farmers. That necessitates that the 70% woodlands, Myombo woodlands, that are currently celebrated as carbon sequestration storage tanks are going to be removed. We are going to do extensive, intensive farming on the 70%, necessarily meaning we are logging the Miombo, replacing that with the big farms where mechanization can happen. We call it development. You are calling it something else, right? These inconsistencies are glaring all over. And I think we need to put a stop to it. When Jay was here, the chief director is not on the panel to answer the questions I ever asked. The Fumvudza question you are asking, soil sequestration through Fumvudza and through agricultural farming, no one can answer there because there is no agricultural expert, there is no soil scientist who can answer those kind of questions. And it's deliberate because we are being co-opted into a Eurocentric approach to climate change and mitigation. And we are Africans. We are still on our stage one of agricultural and economic development. We cannot be co-opted prematurely to endorse strategies of European and Western countries who want to buy our carbon credit so that we are stuck where we are. We will be free to intensify, which means deforestate, which means intensification of agriculture, until such a time when we can feed our people and we can export. Our commitments should be flexible enough to accommodate these revisions. That's what I'm saying. And indeed, Minister of Agriculture, Minister of Finance, Minister of Environment need to sit down together and realign the objectives that they are making at Cabinet. Thank you.
Right, so I assume, Minister, as you said, agriculture is not there, so it was a good comment. We'll leave it at that, and then we obviously will talk. Right, Chair, you can continue with your panel. Thank you.
Well, thank you very much. Just to indicate that while we may not be able to give substantive responses to some of the issues in this platform, we have got a team that is making a note of all the issues that are coming up so that we can engage colleagues in other ministries and so that we facilitate alignment as we go forward.
I think the Chair makes a good point. There will be a report issued at the end of ZEDCON 2024, which will be readily available of all the issues discussed, and of course we can then monitor what we did here to see what's happening in the 2025 budget and also policy changes, I'm assured by the Ministry of Finance. Sir?
Thank you very much. So I will transition to the panelists, if they can briefly give us their last words on the issues. Thank you.
Okay, thank you. Literally just one last word, and it's related to what Reneth has just mentioned. So there is climate change, the phenomenon, and there is the climate economy, and there is the business of climate change. And our governance, institutions, and laws need to recognize this because we need definitely a sector-wide approach to addressing this. Even the laws, when you look at business, we are making environmental laws that are not really considering what it takes to transition from using certain materials in industry to other materials. What does it take practically at a company level or at the industries that we have? So clearly the climate issue and the climate transition cannot be a matter for the Ministry of Environment alone. It's really one of the issues that we need to quickly get into a whole of government, or what I would call a sector-wide approach with clear nodes on which areas each of the areas of government are going to be managing, and also which areas private sector and society will also be managing. Thank you.
Thank you for the one word.
Thank you very much. So the World Bank is, we work a lot on the issue of climate change and development. We've completed our climate change and development report, which was published in 2024, at the same time as our private sector development report, the country sector private diagnostic. And that was for a reason. It was to showcase that climate change comes with significant threats, but also comes with significant opportunities for Zimbabwe. I think this panel and these presentations show significant potentials in terms of climate financing, but there are very big opportunities in terms of private sector development in green minerals, in a number of other strategic sectors that are of utmost importance for Zimbabwe's development. So we really don't think of it as either or, of undermining development in order to provide a climate response. We think that there are opportunities that arise from the green economy that could be leveraged by Zimbabwe. Thank you very much.
Thank you.
Thank you. I think, Doc, specifically, I would be bold enough to try and answer you, though I'm not an agricultural economist. And my answer is no. I don't think we'll get there. I don't think we'll meet our obligations. I don't see it because we're not serious enough. And so we've made commitments, we make projections that are almost desk work. So I'm not sure if we use the current measurements, we'll get there. I'm not seeing enough impetus. But having said that, I still go back, and I love your positing the Eurocentric approach, because I'm of the same, thought process in my little hypothesis that I put out in saying, we're not taking full measurement of Pfumvudza as an example, because we haven't got the matrix okay. And so I would go back and say, let's get the matrix of what we have for agriculture, industry and commerce, and then EMA, whatever it is that however they measure. Because, leadership is all about defining your realities. And I'll give you just a quick example, Chairman, at your discretion. When I was asked to chair the ZIA board, it was a very, welcome move. But for me, what was important was to say, how do we measure progress? And we found the ease of doing business as the internationally accepted matrix. But because I'm not Eurocentric, I refuse to be. I may speak good English, but in Rimunu, okay? And in saying that, I said, let's de-aggregate the composition of what that ease of doing business means. And guess what? We found some quirks in there. The quirks included how far you are from a port. And a country like Zim, it meant on the aggregates, no matter what we did, we could never score as well. Now that's where I'm saying, Chairman, we see what the measurements are for carbon credits. And if we have not been included or we've measured badly ourselves, because it's a new area, let's be blatantly honest about it. It's new to us because we weren't in the game. But we want to go into the game as the private sector. I love Sikada, coming out boldly and trying to raise money. So let's measure, let's get the matrix okay. If we do that, then I think we will be smart. Climate smart, that is. Then, just on the other point, Doc, I think fair points. You're leaning, I hope you can hear me. I'm addressing you. I think the point was, are we measured within your 400 million insofar as what IPAC is saying? We got to do comparisons because we may be looking at different statistics. And I think that's the point. It's not necessarily that we are disparaging, each other, but for certain, what I looked at was when I looked at all your figures, the number of projects were not adequate. I'm not convinced. That's why I put it out and said I reject it outright, because I feel we haven't included some of the projects because we weren't structured to measure it and report it. Whereas now we should be. Even with Ministry of Industry and Commerce, the new projects coming on stream, let's measure accurately. Let's, ZEDA, when they approve, let them capture that data with regards to any industrialization project that comes on stream, and we actually see it. And when factories close, we also should be entitled to some credit. And I think, I'm a statistician, I say, we've improved, although not necessarily in the right direction by design. Then the final point, I love your fresh thinking. If it's not working, then yeah, let's introduce Bitcoin. Let's go to the blockchain methodology so that we can ascertain the world, because the world again have this appealing thing called blockchain. I'm in, lock, stock, and barrel, in that we've got to innovate around our own challenges. And by the way, there's a Bitcoin in Zim, which is under regulatory consideration by the Reserve Bank, called ZEDCON. And the way this thing is going at the moment, guess what? ZEDCON might actually be the answer to what we have as a problem on the currency. Thank you.
Thank you, Nigel. Last but not least, Godwin.
Thank you very much, Chair. Just to say that issues of climate change are cross-cutting. They require the hands of everyone, government, private sector, development partners, so that we come up with solutions for resilience, so that we grow to the upper middle income status as a country together, because the cost of inaction is greater than the cost of action when it comes to climate change. Thank you very much.
Thank you, Chair. Thank you very much. Chair, any final words? Or you okay? Right, let's give our panelists a very big round of applause. I'd like to, Chair, if you could please stay on stage. Can we say goodbye to, Dr. Joyce Chuma, thank you. Give her a big round of applause. There she is. We've also got Mr. Collins Shava. Thank you, Collins. Unfortunately, Dr. Kiniyas Tubu, we couldn't get hold of him, but we've also got Engineer Paul Chawa Gareri. Please, thank you. Jenna Van Niekerk, thank you. You can walk off the stage. And, of course, our panelists, Sekai Kubarika, Victor Steenberg, Nigel Chanakira, Godwin Muewa. Thank you. Please, a big round of applause, guys. It's the final panel, the final day. Remember protocol. Keep clapping, keep going, keep going. Right, ladies and gentlemen, we're now coming. Oh, it's that sad part of the conference, isn't it? I don't know for you, but for me, it's where we're coming to a close, and we're having to close the conference. We've had such a great time. It's been a very effective conference, and a lot was discussed. And truly, it's opened my eyes to some of the things, and some of the policy recommendations were first class. And we'll see what happens going forward, Linda.
Indeed, Andy, some thought-provoking contributions that have been made, and I'm sure that even Honorable Shidua, who is a chairperson of the Parliamentary Portfolio Committee on Finance and Budgeting, will factor in some of these things as we go towards the 2025 National Budget Formulation. Consultations begin this coming Saturday, if I'm not mistaken.
Right, so of course we'd like to thank our sponsors, UNDP, Potras, NCC, Cicada, NASA, and of course our hosts, Ministry of Finance, Economic Development and Investment Promotion. Please, a big round of applause for our sponsors. They really have come through for us. And of course, our host, Ministry of Finance. Well, without further ado, before I ask for our Accountant General to give us some closing remarks, just a quick comment. Panelists and researchers, please complete registration at the reception. Panelists and researchers, that is urgent. So what we'll have now is we'll have some closing remarks, and then me and Linda will close the conference. So I ask the Accountant General, Edwin Zvandasara, to please come and give us some closing remarks. Edwin, please, a round of applause.
The President of the Republic of Zimbabwe, His Excellency Dr. E.D. Mnangagwa, in absentia. The Minister of Finance, Economic Development and Investment Promotion, Honorable Mthuli Ncube, also in absentia. Deputy Minister of Finance, Economic Development and Investment Promotion, Honorable D.K. Mnangagwa, in absentia. The Minister of State for Provincial Affairs and Devolution for Portability and North, Honorable Aramoyo. Honorable Ministers here present, His Worship, the Mayor of Victoria Falls, Secretary for Provincial Affairs and Devolution for Portability, Ms. Standiwe Dumo Ncube, Honorable Members of Parliament here present, senior government officials, development partner representatives, distinguished guests, ladies and gentlemen, captains of industry, the academia, civil society organizations, members of the press. This marks the end of ZEDCON 2024. However, it also marks the beginning of the new phase, that is fine-tuning and actualizing the ideas discussed during the past 3 days. One message that was clear throughout the conference is that climate change is real and is here to stay. Therefore, as a country, we have to sink or swim. The choice is ours, and I think we know our choice. The challenge is doing the right thing beyond the discussions we have just had. Another important message from almost all the presentations is that climate mitigation and adaptation is not the responsibility of government alone, but the responsibility of all stakeholders, especially the private sector. To mark the end of the conference, I want to express our deepest gratitude to each one of you for your invaluable contributions and active participation. Over the past 3 days, we've engaged in rigorous discussions and exchanged critical insights under the theme Building Resilience and Driving Economic Transformation under Climate Change. It is gratifying that the conference managed to successfully serve as a platform for researchers, policymakers, and private sector to discuss how the country can build resilience in order to drive development in the face of climate change. The breadth of knowledge and the expertise shared has been nothing short of inspiring. From the in-depth exploration of meteorological trends and their implications, to the innovative strategies for climate-proofing agriculture, we have collectively illuminated pathways to bolster our economic and environmental resilience. Our examination of macroeconomic impacts, public expenditure policies, and private sector initiatives has reinforced the necessity of a unified approach to tackle the challenge posed by climate change. We have heard from various experts and practitioners who have shared their valuable perspectives and recommendations highlighting both the urgency and the opportunities that lie ahead. We are also grateful for the collaborative spirit which was demonstrated during this conference, supported by our esteemed partners, including the UNDP, NASA, the National Competitiveness Commission, Portras, CICADA, which underscores the strength of our collective effort. Once more, we express our gratitude to the sponsors. It is through these partnerships that our shared commitment that will drive meaningful change and make significant strides towards a more resilient and prosperous Zimbabwe. As we conclude this landmark conference, let us carry forward the momentum and energy generated here. The actionable insights and recommendations we have gathered should serve as a blueprint for our future endeavors. As government, we have taken note of all the issues and recommendations, and we can assure you that this input is not going to waste, as most of them will be implemented in one form or another by our ministry or relevant 9 ministries and other government departments. Together, let us continue to work towards a future where economic growth and environmental stewardship go hand in hand. Input from this conference will immediately feed into the formulation of the 2025 national budget, but also the crafting of NDS2 as we are coming to the end of the NDS1 tenure. In this regard, we're requesting for your valuable inputs to these 2 policy documents. We have designated an email for anyone who may want to share their input for that purpose. And this is a Treasury email address that can be shared. Thank you once again for your dedication, engagement, and contributions. We wish you all safe travel, and we look forward to our continued collaboration in various areas as we work to develop our country. Thank you. Tatenda Siabonga.
A big round of applause. Big round of applause, please, for the Accountant General Edwin Zvandasara. Thank you, sir. Most appreciate that. Right now, before we close up the ZEDCON 2024, there's just one final thing I would like to talk to, if you don't mind. I want to talk about the International Public Accounting Standards, or IPSAS. Now, why am I talking about this? Well, and it's also talking to citizens who are watching on Zim Papers TV Network Facebook page. Government is implementing throughout the entire government, government ministries, government departments, directorates, whatever, local authorities, rural district authorities, one accounting system called IPSAS, which goes live on the 1st of January 2025 when all people are supposed to be compliant. Now, why is that important to citizens? Well, it is a system that's going to capture the assets the government has. It's going to capture the cash flows and how money is being spent by government, how money is being spent by different departments, local authorities. What it is doing is that it's showing citizens that government can, through this accounting system, be able to spend our money wisely. Because remember, government, local authorities, and also, of course, rural district councils, they are looking after citizens. They need to service deliver, and IPSAS will ensure that the money they get should be spent properly, and we can actually monitor it. Guys like me will be able to go in and read balance sheets of various people. Also, we'll also be able to identify all the assets government has. This project is very important. There is a 3-year lead period, but by in 3 years' time, from the 1st of January 2025, it will be 100% done throughout the entire of all public sector in Zimbabwe, as I said, including local authorities. And Precious is here from Ministry of Finance. Where's Precious? Is she here? There she is. Stand up, Precious. Precious is the Secretary of IPSAS for the Ministry of Finance. Give her a round of applause, because she's working very hard at it. So I thought it's important to mention it, because this project is very important, not just for government and public sector, but also for citizens who understand that now government is held accountable for how they spend our money and how they give us service delivery. Right, Linda? Oh, I said it's sad. We've come to the end. What can I say?
Yes, Andy. This is it. The end of the Zimbabwe Economic Development Conference, ZEDCON 2024, which was running under the theme Building Resilience and Driving Economic Transformation Under Climate Change. And I think it's refreshing to get that reassurance from the head of state, and we had here just now that everything that has come out of this conference will definitely be used as input into policy formulation, so that ZEDCON does not become another talk show. We've had so many of those, so it's quite refreshing to get that. We've had our captains of industry coming through, committing to the fight against climate change and ensuring that we really drive economic transformation for this country. And as I was here listening to those contributions, the passion, Andy, in driving Zimbabwe to the promised land, a thriving country that works for each and every person.
Well, that's it from us. So let me just say to all of you watching online through Zim Papers TV Network, Ministry of Information, and of course, Ministry of Finance websites, we now say goodbye to you. This is the end of ZEDCON 2024. Thank you so much for watching us and for participating in this premier economic conference in Zimbabwe. Thanks very much indeed.
I'm Linda Muriro, and Andy Hodges from us. It's goodbye for now. See you next year.
And please, wherever you're going, if you're driving, if you're flying, please, all of you, have a great day, and please be safe. Now, let's talk about what's happening. Today, we don't have any events, unfortunately. There is lunch now, as usual. I'm